Hello, I am just going to get this screen set up. Full screen info. Lovely to have you guys joining. This week we're going to be talking about Cineworld. Let's go full screen. This week we're going to be talking about a Cineworld forecast, sort of cash flow forecast about Hertz versus Cineworld in terms of their bankruptcy filing and also the future release schedule, as well as a few other things. So let me just share my Chrome browser with you, and I believe it should be this one. Nope, that's the wrong one, and that's the right one. Perfect. Right. Welcome to another stream. Thank you very much for joining. I'm going to have a whiskey first. I'm having a Johnny Walker Red Label. Right. First questions come in. Has Cineworld made a profit in this year's earnings report? What's the lid on that thing like? Please share a link to the earnings report if there is one. I have not been sent any earnings report. What we do have information on is Cineworld's earning report from just checking the mic's working. Let me know that the mic is working, guys, because I can't hear it on my headphones. But yeah, anyway, so about Cineworld, there we go. To another stream. Great, yeah, I can tell it's working. So there is no earnings for this year. What we have got is the admissions, but I haven't put that in this week's live stream because the admissions look great, but there's no comparison for January and February. I do have the amount that Cineworld made through every month last year. Let me see. I've got that in this document that I'm going to share with you in this stream when it becomes relevant. But I've got the major film releases. So I've got how many films were released during every month last year, which is simply mildly interesting, but ultimately it doesn't tell you a hell of a lot because the important thing is cash. And so how much each admission is paying is also really relevant. And so even if admissions were down this year, I'd probably be talking about how Avatar is going to be making more money per ticket. But so I think we do have significantly more sales in January than we had before, but then we had an incredibly poor December, whereas a year before we had an incredible December because we had Spider-Man Homecoming. So this is one of those things, like it's one of those weeks, there's lots I'm excited to talk to you guys about. I'm really excited to talk to you about Hertz's bankruptcy and sort of what I think the influence of that could be on Cineworld, what we could learn from that. And I'm also interested to talk to you about the meeting, the pushback on the meeting that happened the other day. But like, even though the share price has moved in the last week, it's only moved 10 or so million in price. And so that's not even volume, that's just people adjusting their prices because they want either more people to be buying the stock or they want to sell some of their own shares. It's really not. I'm going to move my headphones off. So what's been happening today, like in the last couple of days, I can see like sort of tension building in the Discord because when the share price moves, obviously that affects your capital, your capital growth. But really, nothing's actually impacted the stock. It's just stocks that are in Chapter 11 filings are incredibly volatile. And a lot of you should have anticipated that before you purchased this stock, but it's fine. Everyone's a learner. And so, yeah, really nothing has changed for me since it was a week ago. In fact, I'm a little bit positive in a few areas. However, the areas in which I'm positive, there are also negatives that have been added to my my pros and cons sheet. I've added a few points and I've taken away a few points. So, I'm glad that you like the audio. That has taken me a long time to get this right. And also lighting, getting that nice and even. Okay, so let's go on to, these are the three topics that we're going to be talking about today. Hertz versus Cin, we'll get into that right now. Free cash flow analysis, so I'm going to do a quick free cash flow analysis, how much I think we'd need to sell Cineworld for in order to gain cash flow, for shareholders to get equity, also sort of debt to equity ratios, stuff like that. Am I continually freezing? I'm plugged into the router this time, Ethernet cable into the router. So that is really frustrating. If I am freezing still. I'm going to see if there's a way to record myself, record the stream, because last time I recorded the stream, it was freezing still. Anyway, I don't think there's anything I can do about it. I'm really sorry. I'm going to see if I can turn the camera to lowest bit rate, and that might help. So hopefully that helps with the freezing. But yeah, sorry about that. So yeah, now, and then the final thing is going to be the schedule, the film schedule that I'm excited to show you guys. I think it's looking really strong. So let's get into the first thing. These are my notes. Okay, so Hertz was in Chapter 11 filings for 13 months. So that should give you an idea of how long we could expect to be in Chapter 11 filings. We're still not at August. We went into Chapter 11, I believe, in September. So we are still not a full year into the Chapter 11 filings. Again, Hertz was in it for 13 months. So expect more delays. There's a schedule that was published in the last meeting, but obviously that schedule is always going to be like, can we do this sooner? Can we do things sooner? And it's constantly going to be like a debate about, oh no, we need to push it back, we need to push it back, we need to push it back. We went into this voluntarily, so I think we've got a good chance of having several pushbacks. And the more pushbacks we do have a very large amount of debt. So we've got the 1.8 billion of new debt, with 200 million sort of interest payments or something crazy. It's a 20% interest on that loan. I'm wondering if there's ways to adjust that while in Chapter 11, or if there's the knowledge that, you're only getting the interest for a short period of time. So it's not going to work out like it would if you were holding that debt for an incredibly long period of time. Think of it a bit like this. You could run up an enormous amount of credit card debt. You could run up credit card debt with 22% on it. However, you could then go out and get a loan for 10, 15%. And then you could pay off that credit card debt that's high interest, and now you've got a low interest loan. So if Cineworld can get to a point where it's free cash flowing, and it's free cash flowing nicely, then they could quite quickly go out and find debt to replace the Chapter 11 dip financing. And so Hertz was in Chapter 11 for 13 months, and we are not even at 12 months yet. The resolution of its bankruptcy allowed Hertz to shed more than $5 billion in debt. So that gives you an idea of how much money there is in the market, I guess. And so, yeah, this was enormously impactful for Hertz, because once it shed $5 billion of debt, it could then do things like buy a fleet of new vehicles. It put in a purchase for a bunch of Teslas, and it could do some things that would be really helpful for growing the business. And, that's something Cineworld will be able to think about after it's shed off its enormous debt burden that was sort of made possible by COVID. This, and also one of the reasons that Hertz, I think, is particularly interesting, was a business that was enormously impacted by COVID. And then through the emergence of COVID, Hertz benefited immediately. One second, I'm going to have a sip of whiskey. Hertz benefited immediately, whereas Cineworld only benefited sort of now. This is the point at which this slate is coming back. So whereas Hertz, everyone went back to work, everyone started renting cars immediately after the pandemic. Cineworld, we've only gotten the slate back now. And so we are potentially going to see a Hertz situation for Cineworld, I think. But there's no guarantee what happened to Hertz. Hertz was also benefited from government printing tons of money and people buying shares because they had enormous amounts of savings at the time. There were massive savings reserves at the time. And if you think about it, people having savings is also the same as banks having a lot of equity that they can use. So because all those savings are deposited at a bank, and that bank is actually, they're not actually, these banks aren't absurdly rich. I saw Graham Stephan post a list of how much the big CEOs of these banks are earning, and it's sort of a bit like greedy twats. I mean, they are earning a hell of a lot, 30 million or something, but that is actually less than most footballers, most basketball players, certainly in America. Like, most athletes earn a hell of a lot more than that. And I don't think they get nearly as much grief as these CEOs that will have incredibly stressful lives that I would not want for myself. So yeah, after the 5 billion debt, this woman, Sorry, actually, no, it could be man Hamza Mazari. I'm so sorry if I'm butchering that. An analyst at Jefferies. I don't usually listen to Jefferies, but he says it sets them up very well. That's not worth it for that short quote. But yeah, so before the pandemic, the share price of Hertz was $15, and then it dropped to $2. So you're seeing, and then during the Chapter 11 filings, it was at $2. It finished, the shareholders that purchased at $2 got $8 for the stock, and I believe new equity in the new Hertz business. They got a tenth of a new share for every one share they had, or maybe that was just a proposed plan. The plan was shifting all the way up to the end of that 13 months. The plan was shifting. The plan was shifting that entire 13 months. And that's something that you got to realize, guys, is that this plan it doesn't exist yet, and it will only exist when it's been signed. And so every time someone makes an offer for Cineworld, that changes what everyone else is then going to do. Then, that's when someone else will then potentially make their offer. So, this plan is going to be constantly shifting. I think the news that they haven't got a bid of $6 billion yet just means that the creditors are not going to force sale of the business, which I think they'd be foolish to do anyway. But basically, if there was an offer of $6 billion on the line, creditors would stand to make no more money. If there was an offer of $7 billion, creditors wouldn't necessarily care, because why would they care about shareholders getting equity? It doesn't, they might care to the point of there is, I think more than people realize, a lot of respect among people doing business together. There's quite a lot of it might not be the right word, but honor in trade. And so they might care a little bit, but not enough to sort of risk that $6 billion. If they've got a guaranteed $6 billion, they're probably going to try and push for that. So we're lucky that that's not where we are at the minute, because I think what we want to do is force the creditors in order to give us favorable credit, so credit with much less interest, and potentially an equity for loan sort of deleveraging structure of some kind. So let's just read some of these comments. Should we buy more shares? Buying shares is a personal thing, right? And to give an idea, I absolutely see investing in the stock markets the exact same way I'd look at buying a house. And so houses can be good investments, but obviously it depends with how much money you have, what sort of mortgage you get, everything. And so I think one of the things that's hard to calculate is one of the reasons that I do projections is to get an idea of how I'm going to feel emotionally when the price goes to different levels. So Cineworld, one of the factors, I've done a projection in my mind of it going to zero, and I've put in an amount of money that I could comfortably lose. It would be incredibly upsetting, but I wouldn't lose sleep. I'd just move on to the next stock. And so you got to work out that amount. I know that to a lot of you, losing anything feels potentially unacceptable, but it's actually a real natural part of investing. Venture capitalists fully accept losing. Almost everything they buy, they consider it gone. They're looking for one unicorn to carry their entire portfolio. And so, I think for those of you that have gone all in and are losing sleep over this, I think you need to think more carefully about what your financial goals are, because you shouldn't be losing sleep on your investments. But obviously, I believe that nothing's changed for me from when the price was at 5p to when the price was at 4p. So I think you're getting 20% better value today than when the price was 5p. And so, unless someone shares something to me that really shows that Cineworld are worse off than they were 2 months ago, from what I'm gathering, 2 months ago, even with a little sliver of Avatar, 1 or 2 weekends of Avatar, they were still at a $200 million loss, but I can imagine that loss was way higher before Avatar. And then like over January, really strong January, that must have absolutely changed the playing field a lot. I think we will be cash flowing, but whether we're cash flowing enough to have paid off the last 6 months, I think that's unlikely. I think it's unlikely that 1.5 months would have paid off 6 months of a really poor slate. But let's go and have a look at the future slate. I can pull up the cash flow bit in a minute, but let's look at the full slate. And so Chrome plus Cam, I always go for the wrong one. And that's the wrong one as well, info. So here is the film slate you can see. And what you've got is this weekend you have only 2 worldwide new releases, and that is because it is the second weekend of Ant-Man. So a lot of studios are avoiding being out when Ant-Man is completely fresh, but still 2 releases is really good. So you got Cocaine Bear, which is getting really good reviews on Rotten Tomatoes from, can't take that too seriously, it's from the critics. The critic score is incredibly erratic and usually has nothing to do with the audience score, and the audience score tends to be the one that is actually correlated to how well a film does. And then after that, you've got Creed 3. That's going to do well. It's getting a lot of marketing. People really love the other 2 Creed films. Then you've got these 2 other. It's just cool to see 3 films being released basically every weekend. 65 is the film that I'm personally going to try and go see in the cinema. I'm really excited for that. This is 1 week after the other. 1 week after the other, you've got these films coming out. Cocaine Bear, Creed 3, 65. Oh, I've accidentally clicked on March 10. And then what's after 65? Inside. Oh, you got Shazam. There you go. That's going to do really well. You've got John Wick Chapter 4. This is every single weekend is a blockbuster, and they'll probably add other films to these. And so Dungeons and Dragons after that, week 5. This was completely different to a year ago. And they're releasing 4 films that weekend. It must be some sort of bank holiday weekend or something like that. So yeah, it's look at that, wide. Those are the films that are really important. The fact that they're worldwide releases. And so yeah, I think the slate is fully back, which is crazy exciting to see. Hertz, a company that went into bankruptcy, Chapter 11 bankruptcy for 13 months in the pandemic, managed to emerge with shareholders that bought in at $2, getting $8. Shareholders that bought prior to the pandemic at $15 got half their money back. So this is why it's different for everyone. If you manage to get your average down, I think it makes a big difference. But if you bought in at 2p, you are having a completely different, because you're already doubling your investment. Yeah, it's different for everyone, but I do see the share price as a deal at 4p, but you just got to be careful with investing the right amount of money for you. So let's see if there's any questions in the chat. If Sin doesn't find a buyer, auction would be disappointing. In what scenario will the current shareholders recoup their shares? So to do it really simply, the scenario in which shareholders retain the most equity is with a strong film slate. That is the thing that will drive the most cash. So the most people showing up in the cinema is the scenario in which that's still the scenario in which we make the most money. We're still looking for the same thing as if we weren't in Chapter 11 bankruptcy. It's already clear that creditors earlier on in the filings do not want to just take ownership of the company, and the shareholders have gone to enormous lengths in order to prevent that from happening as well. And so let me take a look and think about your question just a little bit more. If Cineworld doesn't find a buyer, auction would be disappointing. In what scenario will the current shareholders recoup the shares? So then another answer is if the bid is over 6 billion. So if the bid is like 7 billion, but in the example of Hertz, what they were talking about to begin with was just equity swaps, and existing shareholders were going to get equity even before there was a cash buyer. I think if there's a bidding in the bidding process, it's likely going to be they agree to purchase some of the debt and existing shareholders get some of the equity. I talk about this quite a lot in my other videos. I could pull up, one second, let's see if they're in the slides. Monkey had sent me some stuff. Okay, they're not in these slides. But just some restructuring ideas, but they basically work out as we're thinking 20p maybe would be the sort of conservative but also optimistic outcome in the event of a restructuring looked at from a few different very complicated perspectives. One of the complicated perspectives is one of the intangibles is rest of world has 300 million of debt, but that debt is owed to Chapter 11 Group. So if we gave Chapter 11 Group to the creditors in exchange for the debt, then would we theoretically hold on to rest of world, but rest of world does owe debt to the Chapter 11 Group. I think what gives me confidence, this definitely helps ease things. What gives me confidence is the speed at which we are returning to a full film slate, and the fact that people seem to be showing up to the cinema. Although Ant-Man hasn't performed exactly how we'd want it to, like we would have loved to have seen explosive growth, it is February, which is typically a sort of a slower time of year. Like March is generally the best time to release a film. It's still raking in like 100 million on its own, and then you've got these sort of other films underneath it doing well, and you know that Ant-Man is going to perform well for several weeks. So I think there's a real decent chance if we can be in Chapter 11 filings for 13 months, which is how long Hertz was in, a typical filing is 18 months, then we could be in an incredibly different situation by that point, because we could have been free cash flowing for a long time. So let's just have a look at the free cash flow for a second. And I'm going to switch to the info screen. This here is, we do have admissions. So we've got admissions of, and these are in million, I believe. Yep. And so you've got 10 million admissions in January, February last year. So if I go to Cine News, and someone shared the admissions. So this is how many admissions there are. And if I copy this image and put it here, you guys will be able to see it. And if I zoom in, just reloaded the whole document because I've forgotten how to use computers. Show me the admissions, it's so small. So you've got here 1,744 admissions in, so this is the forecast versus the actual. So Feb 06 was forecasted to do well, actually did not that well, but then every other month did really well relative to the forecast. So the rest of January did, like January to Feb did exceptional, then Feb 13th to Feb 19th did really, really, really well. But let's look. So you've got what I believe there is 2 million admissions. 1923. Does it say millions or not? I think so. It's just such a shame that this is a screenshot of a screen. It's a photo of a screen. You guys got to use screenshot. Just Windows Shift S, and you can screenshot the screen. But anyway, you used your phone. At least we got it. At least we got the information. So what we've got there is, I believe, you've got double the admissions in January 2022 than you did. Because look, you got 10 there, and you got 1,900. Where on earth do people put the bloody like millions of how many people there are, but you got 10.3 there, and then you got 1.95. So they're different. They're both written in different number styles. But I'm going to go out on a limb and assume that they projected what, like double, like what's it? It was 10 last year, so 15 this year, and we got 19. Is what I think has happened here, and so I think we've had double the admissions that we had in 2021, and so that would be incredibly positive if that's the case. One thing I would say is they really predicted bad. I mean, I don't know why, but they predicted a really small footfall in January, the first weekend, and then the second weekend there was actually less than what they'd predicted. The third weekend there was a little bit less than what they predicted. It was only because they got the first weekend so wrong that we've actually got more than what they predicted. And then you can look at, oh yeah, of course, this is all of January. So you got 2,592 and forecast actual 90%. Okay, sorry, all of them. Yeah, most months are the actuals are higher. Sorry about that. Most months the actuals are way higher, which is great to see, but you need to be able to compare that to some other stuff. What you can compare it to is this here. This is the debtor in possession document from way back. And so if you go to Cineworld's investor relations page, there is a special location. So I could take you there now. So you go, this is the RNS page, allow cookies. If you go to investors, it's so annoying the way it does this. You can just let me, there we go. You've got debt information, and then you've got debtor in possession. And that's where this document is. And you can find useful information like how many admissions there were. So that's this page here, the cash flow forecast. Okay, so I think that's everything. I'm just going to do a little quick check to see if there's any questions. I know there's a few things that were requested in the Discord that I didn't have the ability to answer, just because I don't feel like I'd done enough research to be able to answer them honestly and feel like I was providing true value. I feel like I don't like answering things that I haven't done just a little bit of research on because I want to give value in everything I say. When is the next bit of news coming out? The next bit of news, it's not going to be up to us. It's going to be up to, let's say if you were buying a house, it would be at the point where you decided to put a bid in. And so we got to wait for whoever wants to buy Cineworld to put a bid in. If they want to put in a price that's 6 billion or higher, then it's going to be news. But I don't think that's not happened yet. That's what we know for sure, that's not happened yet. And I don't even think that shareholders are looking for that. And so we got these dates that are planned, but the dates are constantly going to be pushed back. There will be a point, even the one that says that there's an auction. There's going to be a point where there's an auction. No one's going to force the auction if there's like news that Cineworld is cash flowing really well and paying off debt. That's going to change how everyone feels. The fact is that that's only been happening for, say, a month. That happens for 2 months, it gets more interesting. So they go, okay, can we delay for another month? Because of new information. New information can always change this, but we're not privy to all the information, and neither is are the board of directors. The board of directors may be operating on a hunch as well. And here's one of the things. If the board of directors, they're fighting to get the best deal for them, and Mookie has aligned interests with us, the stakeholders, given that he has a 20% stake. I know that, like, if there's no way to get equity for all stakeholders, the person that he's going to try and get equity for is himself. I'm fine with that. But so long as he's fighting, like, to get equity for everyone first, and only in a last resort would he get equity for himself, I think that's how I'd see it, because I think it'd be against his own interests to just think about himself. Anyway, they don't know what's going on. Mookie doesn't know what's going to happen. He doesn't know how many people are going to show up for Ant-Man. He doesn't know how many people are going to show up for Cocaine Bears. No one predicted how many people, not even Universal Pictures, knew how many people were going to show up for Megan. That did really, really well. And the creditors, they know even less about Cineworld, and they know less about cinema. They just knew about Cineworld's cash flows back when they initially gave them the money. And back when they did that, they gave it a decent amount of interest because it was risky, but they deemed it a wise thing to do. So it's not just on the board of directors, it's on the creditors too, that they thought that this was a wise investment because no one predicted a pandemic. And also the judge is he's someone that is he cares mostly about first of all, he cares mostly about Cineworld employees. The people that are working for Cineworld, have been for years, managers at local Cineworld cinemas. He just cares about the overall business remaining. And so he doesn't give a shit about creditors. He doesn't give a bit shit about stakeholders. And so that is what I like about him. He seems very unbiased. He's just trying to make sure that Cineworld is left in the best possible situation. And I think that it's clear to everyone that leaving Mookie in charge is probably the best situation so long as there's not another pandemic. If we had a business that had less debt, then it would cash flow beautifully. The machine would hum perfectly. And so I think that's something. We got 20% on our debtor in possession financing. If we could just get if we could just get a loan to replace the debtor in possession financing. So if we could find someone to lend us enough money to pay off the debtor in possession financing, and so that we just had 10% interest rather than 20%, well then we don't need to do anything. We just need to be able to pay off our new interest payments that are slightly higher, which back in 2019, as we talked about, the free cash flow of the business was we had a 3 billion in revenue and we had a free cash flow of 500 million, and free cash flow is usually calculated after dividends. The dividend was 500 million. And this is why I talk about the fact that the business can technically have a 1 billion cash flow. And so I think, and this is what I talked about in the Discord, if we had 70% revenue of 2019, we'd have 100 million surplus free cash flow. We'd need more than that to pay off legal fees and to pay off our new interest payments, but that's 70%. And I think by looking at the numbers, looking at the admissions, we are seeing I think we're seeing double the amount of foot traffic that we're seeing comparatively in 2021 due to a broader slate. So it's an exciting time to be a Cineworld shareholder in Chapter 11 filings. I am more optimistic now than I was at the beginning of these filings. But that doesn't mean that I'm a hopeless optimist. I just believe in, I do generally believe in optimism over pessimism. I think that people who are, it's a frustrating thing in society that pessimists are deemed more intelligent. If you look at a pessimist, if you hear someone most of the time on the news, if someone comes out and says the market's going to crash, everyone gives them their airtime and looks at them and goes, oh, this person's a genius. Someone goes on and says the market might crash in the meantime, but overall it's going to be fine, and unemployment will be balanced over decades and gradually life will get better. Like, everyone would just be like, not interested. Actually, if someone came out after World War I and said where we're going to be today, they would have been called a raving lunatic. So I think things can get better. I think everyone's waking up every day trying to make everything better, and sometimes it's not possible. But I think so long as that's what people are walking towards, that's what you'll get most of the time. So, all right, until then, thanks very much, guys. Enjoyed chatting. See you next week. And also thinking of doing a Warner Brothers Discovery valuation one of these days. So a live stream chatting about the free cash flow of Warner Brothers Discovery. They've got quite a lot of debt, so it's kind of a moon or bust situation as well for them. But I think that they are a really promising business for a number of reasons. So if you'd like that, leave a comment below, because I'm only going to do it if people want it. So yeah, just let me know if that's actually something that you'd want to see, and I'll make a stream. All right, cheers, guys. And goodbye.